Good morning, everybody. Hope everyone's doing wonderfully well today as we get into the action in the game plan. First and foremost, my name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so as always, folks, we're going to go over the technicals, the data, and the probabilities. No hype, no nonsense, no narratives. It is what it is. Sometimes it's bullish, sometimes it's bearish, and some days from one day to the next, because of the charts, biases can flip. And that's the important thing about being a trader, is that you have to be able to recognize when a chart fails a bull flag, for instance, or fails a bear flag. And all of a sudden, probabilities swing wildly in the opposite direction. The best traders in the world, the best investors in the world are going to be the ones that recognize it the quickest and react. All right, so what do we have today? We have a market that is basically flat. We're coming off a rally day yesterday as well as on Tuesday. So we had two back-to-back up days, although yesterday opened sharply higher, and we did give back a fair amount of those gains. Part of the issue yesterday was we heard that, all right, so Jerome Powell's not going to get fired by Trump. That was a positive. But then we also heard that things were going well with China, that tariffs might be reduced. And then Bissett comes out and says, oh, we're not talking with China at all. Then later, Trump comes out and, oh, we're actively talking with China. And then China comes out and says, no. There are no discussions whatsoever. So listen, the markets literally are swinging on every word out. And again, it doesn't seem like there's any sort of major discussions going on, even minor discussions, frankly, with China. So the markets did give up a fair amount of their gains yesterday, although they ended up about 1.7% higher. Now, today we're into a day where we're coming off some earnings. We got durable goods orders this morning, which came in very, very strong at 9%. So to put this in perspective, last month, durable goods orders were 0.9%, 0.9. This month they were, or basically in the last month now, they were 9%. Now you might say, wow, that is amazing. That must mean the economy is roaring. But no, it doesn't. It means that everyone front-loaded their buying of durable goods because they knew tariffs were going to be imposed. So you're getting a real big spike now, and then likely next month, durable goods orders will be like negative numbers because, again, there was so much front-loading. All right, let's turn our attention into the markets here and flip over to the charts. This is the S&P futures chart. So again, we're seeing basically the S&P before the stock market opens. This was yesterday. So here you can see that big move up in the markets early on, and in the overnight rally. We opened, we collapsed down, and then we chopped into the end of the day. Overnight, we started to fade, and then we've actually rallied back a little bit here. Now, you guys know my bias, right? So if we recall from the last few game plans, we've talked about that major retrace level from 2 Wednesdays ago. So went 2 Wednesdays ago, now 3 Wednesdays ago, we had that monster up day, 10% on the S&P. The next day we retraced. That low is our key level to watch. So that is the determining factor of whether I am bullish or bearish, because that's the technicals, right? So again, as of now, we can see this is your retrace low. We held it, we rallied up, and then we're trading basically flat today. But as long as we do not close below this 51.47 to 50 level on the S&P 500, I would favor upside to the 5,700 level on the futures. I think on the S&P itself, it's around 5680, but it's right around 5,700. We'll just call it 5,700 for the basis of kind of ease. Okay, so again, the bias remains bullish. And again, this is just probabilities. So we want to always focus in on probabilities, not our personal feelings or fears or whatever it may be. The bias, again, remains with upside to this level here, unless we have a daily close below 51.47 to 50. Okay. In terms of upside, I've told you guys before, and I'm very straightforward with how I'm positioning myself. I am overall long right now. I do have a few shorts out there, but generally over the last couple weeks since the low was put in here, I have long positions, and I'm looking for that move up. If we achieve this move and we get into this, that'll be where I start to short the market and short individual stocks. Okay, so again, could we go a little higher after that? Sure, we could. And then I start small here and I'll dollar cost average just like I do with all my other positions. But overall, this is kind of my starting point. Now, some of you guys may say, well, what if we turn down before that? What if we go here and then we start to fall and break down? Then that's just the nature of the beast. And I miss some trades. But as I always say, folks, I miss literally trades every single day I'm missing. It's not about what you miss. It's about the discipline and the ones you catch. So again, the discipline of saying, these are my levels. If we get here, I'm going to do X, Y, and Z. If we don't, I'm not going to compromise my belief or my discipline just because everyone's FOMOing into a position, right? AKA, Bitcoin at 109,000, right? And again, pulled back to 74,000. But there was so much FOMO at that high. I still remember every time Bitcoin gets to a high, and we'll go over the Bitcoin chart in a minute, but Bitcoin gets to these crazy highs, which are awesome to see. And I'm still a huge believer, but I recognize the hype because you start seeing on social media the 250,000 year-end target predictions, right? And as soon as you start to see that, number one, in retail investors, it starts to trigger the FOMO, like, oh my goodness, I better get in. So they buy the highs. But for me, I recognize that, and I want you guys to recognize that and start to say, wait a minute, if I'm seeing that, we're probably closer to the end of a run, and we're probably going to get a pullback, and I'll get a better buying opportunity. So again, these little tidbits are influential in making you a much better investor and trader. NASDAQ 100, same thing. We held this low pivot here on the QQQ, the ETF that tracks the NASDAQ 100. It's around 432.50. And as long as we hold that, I would favor a move up to about 476. This gap fill here, that'll be where I start my nibbling on my short positions. 10-year yield is coming in. As the yield has come in, what do we see in the markets? The markets have rallied off of their lows. Remember, right now, the market is a little freaked out about other countries not wanting to buy our debt because of instability and trade wars and all these other things. And again, therefore, any downtick in yields, it's not so much about a weaker economy, which can make yields go down. It's more so about a flight to safety where there's more buyers for treasuries, and then that pushes the yields down, right? It also tells us that the Fed, if things act more normally, then the Fed will actually be able to influence if they have to cut rates. Okay, next up, we go to some earnings from yesterday after hours. ServiceNow ripping higher on earnings. You can see right here, closing yesterday right around 814, trading currently at around 885. That's a nice, I think it's about 8%, 7% move. Here it is in the pre-market. You can see where it's trading right here. For me as a technician, there's a couple levels I am watching. Using my Fibonacci tool, I take the all-time high to the recent lows. And what I notice is, number one, we're at the 382 level. Now, because we've been there since yesterday and even above that level in the aftermarket, I'm not going to trade this level. But I might be interested in day trading this 940-ish level right here. There's also a little pivot top right here. And if you go back here, look at these levels right in here, right there, that basically coincide with the 940 level. So the fact that we have a Fibonacci retrace as well as past pivot points right over here and right here, it makes me very aware that this could be a day trade. Now, you might say, well, what about a swing trade? Swing trade, no way. It's not extended enough for me, and I don't like to short in on a swing trade the first day of a big move to the upside after an earnings beat. So what I'm going to do is instead look for the 618, which interestingly enough, look at this. This high exactly, this low exactly, this low exactly, and then right over to here exactly. And it's also exactly the $1,000 even number. So for me, this now becomes my swing trading opportunity, for me at least, right up here. So again, if we get up in this range, I would consider a swing trade short. So this one down here is your day trade short, for me at least, that I'll be looking at today around 940. But on a swing trade short basis, if we get up into this 1,000 level, that'll be where I start to inch in probably to a swing trade short. IBM. IBM reported earnings yesterday after the bell. Their earnings were very, very good. But the problem with IBM is they said 12 contracts, 12, were affected by Doge cuts, so government cuts. And the stock just cratered once that news hit yesterday in the after hours. So the stock initially, you can see it initially popped sharply on earnings and then reversed and is now trading at around 228. So we say, okay, so it's trading at 228. The first thing I have is this trend line right here, and this is around the 220 level. So right off the bat, I will be looking at the 220 level as a day tradable level, not a swing trade, same policy. A stock dropping, I usually won't pick it up on the first drop day because there could be subsequent days to the downside. But on a very least basis, 220 today, there may be a day tradable level. And then if it actually gets through the 220 level, there would be an additional level here around 215, your double bottom right there, which actually, interestingly enough, extends right over here. And look at this, all the way over here. So that should be a significant intraday level as well. So 220 and 215 are the two trading levels today that I will be zoning into with the live day trading room as we get into that action. Texas Instruments. This is a semiconductor stock. It is up on the day pretty nicely after closing yesterday at around 152, spiked higher on earnings, consolidated, then ripped higher this morning in the pre-market, trading at 167. So that's about a 10% move, which for Texas Instruments is actually a very solid move. So we're about 167. I have some old trend lines going back a ways over here, but we can see where would that first level be. Now, the beauty of this, folks, is when I show these charts, I always hope that you're guessing ahead of time at what my level is going to be. All right, so let's see. We're trading at 167. What would be a potential first trading level? And the first trading level for aggressive traders, there's a gap fill here. I don't think I will trade this at 169, but there is a gap fill. The level I'm more interested in is right here. This pivot low and this pivot high right here, right here, right here, right here. And then there's even a gap fill just above for an add. But we're talking around the 173.30 level right here. That's a level of interest. Now, I didn't do my fibs before, so let's just do our fibs just in case. Oh my gosh, amazing. Absolutely amazing. Look at this. The 50% from this high to this low. The 50% fib aligns perfectly with that level. So now the beauty of that reinforces the probability that if it were to rally up into that today, that would be major technical resistance. All right. So again, basically 173, we'll call it, very good resistance on Texas Instruments for a short. And then if it rallies higher, an add level would be around 178, the gap fill, followed by the 618 at 180 right there. So again, this would be that starting point for a solid day trade level. All right, so this morning we got earnings out there from various companies. Most of them are not moving major levels. American Airlines reported earnings. Look, from yesterday's close, it closed at around, actually it was over here. It closed at 932. It's trading at 922. So 10 cents, it's not even going to get me out of bed to even bother with that. I mean, that is just not a big enough move. Pepsi reported earnings today. Same thing. Closed here. Look, it's barely moving on earnings. It did have a little drop initially and then came right back. Merck, MRK, basically same thing. So nothing going on there. And this, by the way, this is what I do. I literally flip through all these earnings and I just want to see if something's moving significantly for that stock, then it goes on my radar. If not, I say, oh, well, yeah, Merck, Merck closed down right here. It's basically flat. Okay, on to the next one. Don't even need to waste. Oh, that's Dow Chemical. Excuse me. Dow Chemical. Don't even need to waste any more time on that. UNP, Union Pacific, again, railway transportation stock. This one's down a little bit, but as of now, I don't think it's quite big enough. We closed yesterday around 220. It's trading around 211. If we go to the daily chart, maybe 205 to 204 right down here, double bottom. But I'll reevaluate that in the near term. But yeah, I mean, that's really, TSCO is always a fun one. Usually this one has a decent move. It's down decently here. If we go to the intraday, this is the Tractor Supply Company. It's down a little bit. There's not much volume there. Comcast CMCSA reported as well. And that one's actually getting a decent move here. This one actually should be on our radar today because it closed at $34.40 yesterday, and it's trading at $32.40. On a $30 stock, a $2 move is getting in the range. And then I have this old trend line here from a gap fill. Oh, there we go. All right. So that's probably going to be first level there. There's a gap fill right there at $31.40. So another dollar lower, which would be almost a 10% drop in Comcast. That would then get me on the radar here for a trade. All right. So I'll keep that on my radar as we get into the trading room today. All right. Flipping over to gold. Gold is getting a technical bounce after a 2-day big sell-off here. This is not surprising. In fact, psychologically, this is very normal. Just to explain what happens here, folks, is that when you've had a bull run like you have in gold, and then you get a pullback like we've seen, which from peak to trough was about 6 or 7%, you will have a bounce day after a couple down days. Now, you might say, well, why? I mean, it's still overbought over the last month or two, but you have a lot of money that was sitting on the sidelines regretting that they didn't get in. And so when you put in a pullback like this, there's going to be a certain amount of buy the dippers. We saw this in the stock market for a long, long period of time. And so while I still think gold is still going to turn back lower, this is one of the reasons why I took half off the table on my short on gold yesterday, because if you get a bounce, I might even get a better entry. In fact, from where I unloaded it yesterday on the GLL, it's about a 40-cent better level now than where I exited yesterday, meaning that I exited at around 1140. It's trading now back around 11 on the GLL. GLL, by the way, for those of you out there, it's an ETF that is 2 times short gold. And so it's my way of getting exposure via ETFs versus actually shorting the commodity in the futures market. Okay. But my point is, again, is that that's a great utilization to understand the psychology of investors, because you'll get these pullbacks and then the bounce, and then you can re-short the bounce for that next leg lower in the near term. And again, keep in mind, I'm still a mid to long-term bull on gold. It just was at the levels. Like the chart, it didn't matter how bullish I am on gold over the mid to long term, or how much I think the debt in the US and the Fed and the fiat currency BS and all this. That doesn't matter. That's my long-term view. Shorter term traders, you have to kind of disengage from that. And so you focus on the technicals, and that helps you make a logical probability-based decision instead of getting wound up in, oh yeah, but the US is just printing and spending and, look at the global, that's long-term. That's not what we're doing here. All right. So, all right, back to the charts we go. Silver, let's take a look at silver. Silver had a nice move on that bullish pattern yesterday. That was nice. So again, little consolidation above support right here, pushing up beautifully. Small pullback today, but nothing to write home about. Nothing really new there. Bitcoin pushed above 92,000. It never got to my short level that I talked about yesterday, which was right around that 96,100 level, but it still looks like it could push there. So I'm still intrigued by a potential short, maybe at 96.1, 96.2. If it pushes up there, of course, I will keep you guys on point. I did unload a fair amount of my altcoins for good profits yesterday. I still hold a few of them. I even hold Ethereum. Ethereum is one that I'm currently holding a position in. It did stall out at resistance here, but I'm hopeful we build a bull flag and then we can break up and head towards this next level. But this wedge pattern was a beautiful wedge breakout, and then the bull push, and then obviously slamming into resistance. And just look at how I found that resistance, guys. For educational purposes, it was pretty simple. This low here matches with all this sideways, and then we broke down. So once you break support, what does support become? It becomes resistance, right? So support becomes resistance, resistance becomes support, and therefore that's why you're stalling out here. And at least that's why probability favored it, and that's what's happening. Okay, so just something to keep an eye on there. U.S. oil today, let's take a look. Oil did come down yesterday. Look at the beauty of this bear flag, folks. It is a great bear flag. Now, you might say, well, Gareth says it's a great bear flag. Why isn't he shorting it yet? Just because I'm being disciplined. Like, my level was here. It's still there. So if we push up into that, I'll short it most likely. I can't guarantee because I have to see it in real time when it hits. But as of now, that would be the level, and that's what I'm sticking to. All right, I'm not going to jump the gun at this point. If I miss the trade, I miss the trade. Like I always say, I miss plenty of trades. It's not about the ones you miss. It's about the ones you hit. Lastly, natural gas. Nat gas was coming down, continuing to come down. Natural gas is getting close to technical support. There is a chance that I would be interested in picking up a small starter position at 297 on nat gas. I'd probably use the UNG as that vehicle, since it's an ETF that tracks that. But again, that would be just a starter position. They call this the Widowmaker for a reason. There's also a gap fill at 277. So if I start a position here, I would probably add to the position right in here. All right, guys. So really, when it all comes down to it, the markets will continue to be like literally on the edge of their seats for any sort of tweets, any sort of commentary from the government or from Besant or Lutnick or Trump in terms of trade action. Aside from that, we're just really keeping an eye on earnings. We have Alphabet after the close today, Intel after the close. So I think T-Mobile reports after the close. So there should be some good action on earnings and directionally on the market, at least off Alphabet, which, by the way, the expectations for Alphabet are pretty low because the thought process is they've been going through antitrust issues, advertising issues, and slowdowns. So it's going to be interesting. If it was a little bit lower, I'd really favor it into earnings for a pop, but it's not quite into technical support. So I just don't have the signals yet that tell me that. All right, guys. On that note, I got to bid you farewell. Thank you, as always, for tuning in, guys. You seriously are rock stars. I appreciate your willingness to learn with me and let me teach you guys and do my best to really convey the information up here so that hopefully it helps you improve, even if it just helps you a little bit. That's really my job here, and that's what I love to do. So thank you again, guys, for tuning in. I'll talk to you soon. Take care.